Today we're going to analyze this chart one piece at a time, and what it's going to do, it's going to show you a MAD fractal back from July 2018, the freaky ways that no matter how you cut the cake, current Bitcoin price action is freaky similar to what was happened in July 2018. And really, there are so many ways it's extremely similar. And the reason I'm making this video is for twofold. First, within my Discord community, different people's analysis have been leading to say, ugh, looks just like July 2018. And after a while, I said, man, it really is. Like, it's been like 10 different ways that's extremely similar. But two, the most important thing about this is it will allow you to have another tool in your bag, okay? On top of all the tools I gave you yesterday, which are extremely valid. If you didn't check out my Bitcoin video yesterday, I gave you all the key pivotal points that you need for short-term price action throughout this week, okay? This is a fresh new look to look at Bitcoin from way up high, to see it from a new angle, and it's going to be a tool to say an if-then statement. If this, then bad. If this, then bad. Let's go get it. Let's give you another tool. Are you ready? Let's start dissecting what we're looking at. I will take off all these EMAs, and let's start off with these red vertical lines, which are the Bitcoin halving dates. The white line protruding out of it is a measurement of how many days from the previous Bitcoin halving. In this case, July, this fractal happened about 740 days. Current price is just under 700 days from the Bitcoin halving. So that is similarity number one. Similarity, number two is a very specific rejection from and I don't use simple moving averages very much, right? This is something that somebody else brought to light for me. A specific rejection by the day, or this is the daily 200 simple moving average. And once again, zooming into current price, daily, and it's almost to the dollar, rejection of the daily 200 simple moving average. Next thing, and this is going to layer on top of each other, and you're going to see there is no other case in Bitcoin history, not one, that's even close to this exact setup. If you want, as you layer everything on, this gets kind of scary here, and there are more ways on top of this that I can show you, especially like the crossbad on the fire. I can show that after I show you this freaky not coincidence, but this setup. All right, now not only is it similar in distance in time axis from the halving date, and it got rejected by the daily 200 SMA, but that all is happening at an exact moment, and I'm going to take off price for this. It's happening at the exact moment that the weekly 10, so even though I'm on the daily chart, this is the weekly 10 EMA, this is the weekly 55 EMA. Weekly EMAs are very important. Weekly 10 had gone below, so red below blue, then it got back above blue, right? And that's the exact moment where price got rejected by the daily 200 simple. Now go to current price. Red went below blue, came back above blue, got rejected by the 200 simple moving average. Okay, do you see how all this is stacking up to be, just eerily similar? Put price back on. And another way this is similar that I really wasn't planning on talking about today is my cross bad. So cross bad, this might have more to do with the time axis. It's similar time axis from the previous halving date, but look how this moves. Watch. Remember cross bad from my earlier videos? This is the 5-day chart, the 21 EMA going below the 55, which typically marks the second half of bear market. Actually, it has every single time. It marks the second half of bear market, in which you either start the second half or you capitulate. There are only two options that has happened. Could something new happen this time? Absolutely. However, and historically, this is the only way. It does mean the second half of the bear market, but it's this fractal in both times. It got cross bad. You rallied above it. Okay, the first rally above the cross bad. Watch. Cross bad, it's the first rally. So cross bad, first rally above. And that there are way more ways that this is really similar, and that wasn't even a way I was planning on talking about today. So let me throw this back on. And again, the reason why this fresh new look of how Bitcoin is similar to this fractal is it will allow you to have like a more definite point, like a line in the sand saying, if this, then bad, if this, then good. And we're getting ready to define that. A quick spoiler is I think it's going to have more to do with a weekly closure. So let's go define what that exact point is. Turn on your camera and microphone and ask me questions directly and live up to 8 times a week. Follow me on Twitter, cosasverdes with the number 2 afterward. If online communities like my Discord and the links that were in the description section are not your thing, but you want more content, exclusive content above and beyond what I offer on YouTube, there's a join button that's right below this video. Go ahead and click it and a very short video will pop up describing your options to you. All right, now that we have all these similarities stacked on top of each other, let's go dive in here and determine when could you have told yourself the edge to the downside gets extremely prominent. And that is going to define our line in the sand. Let me go to the daily. Let's start off with the daily chart. See if there's any line in the sand on the daily chart, which I don't think there really is. Because you just had a bunch of, red candles going down. I haven't really been able to see, if one daily closure below both of these is the defining moment. I think that could be your warning shot. Right? Your warning that, hey, even though this might not have been the weekly close, this could be your warning shot, but I don't think it's the line in the sand. I think the line in the sand is going to be a weekly closure. Let me fumble with my chart. And the very next week after the height of this, just a week closed below both of these lines. And right now, both these lines are pretty much together again. I think this is the defining moment in the sand. And again, weekly closures happen, at least New York time, at 8 p.m. At 8 p.m. All right? So you had the height of the run right here. The next candle's red. If this candle closes below both of these EMAs, which they are together, so if you get a weekly closure below 42, let's just call it 42.9 or 43K, get a closure decently below 43K, then the edge to the downside is extremely prominent because that's your line in the sand. Let's go to the daily chart now. Have we had that warning shot of a daily closure below? No, we have not yet. However, if a daily does close below, I think it's possible on a weekly scale that would only end up being a wick, and the week actually battles it out and closes above that line. Let me go like this and flip it around. You could have a few more days within the week until Sunday. So Friday, Saturday, actually only, so in this case it'd be like this. Friday, Saturday, Sunday, where it closes just above. I think one day below isn't necessarily death sentence, but it does start stacking on the probabilities to the downside, but I don't think it's more of your definitive line, okay? All right, so right now, these are the daily candles. Nothing has closed below there, and today is a green candle. It doesn't look like it's going to turn on a dime and turn red and close below. So right now, things look, relatively safe, but there are several more days in the week. So looking at this week here, I think your defining moment is a weekly closure below, let's call it 42,920. If the week closes below 40, this number could change by a few dollars, so let me warn you. And again, I will update. I might just do an update on Twitter about this line in the sand. So if it changes by a couple dollars, I'll let you know. But at the end of the week, I will make a post or even a video about where the weekly closed. And then again, it could be, even if you get a closure above this line, the next week could easily then close below this line. And then you have more of your definitive line in the sand type of stuff. It doesn't just have to be this week. It's not like this weekly closure closes above, oh, we're safe, back to the moon, up to 70K, up to the top of the range, which, the tilted range, it would be back to 70K. It's not allowing you to say that. Rather, it's saying, whew, we battled that week out. Let's see if we can do it one more week. Okay, so one closure above is it's not necessarily the greatest thing in the world. It's just not bad. Okay, so cross bad, but not bad. If we can, almost like your Obama face, not bad. If anybody remembered all of those memes back from probably 2010 or 2012 or so. All right. And that is what we're looking at. This is our line in the sand, 42,920, or this really does mix with my analysis from yesterday. And again, I really suggest that you watch my analysis from yesterday because really nothing's changed in the charts from yesterday to today. And I give you 3 or 4 exact tools I wasn't making guesses of what price will do it as you use these tools. Rather, I gave you the exact tools that you need to analyze price for yourself and show you how to draw them on your charts, exactly what levels I labeled them. So go ahead and make sure that you check out that analysis, because this closure, it aligns with one of the tools, which is the weekly 10. The only difference is that in today's analysis, we're focusing on Sunday. Does the day on Sunday close above the weekly 10? So the daily candle of Sunday, which is the last day of the week, does Sunday close above this line? It's yesterday's analysis with more specificity. And so go ahead and click this link right here if you didn't watch that video from yesterday, these 4 cool tools that I gave you, and click this link right here if you want to learn, it's over here somewhere, if you want to learn how to set up a chart just like mine with a 28-minute trading view tutorial. You just got Timified Worldwide. Peace.